Hi, good morning, guys. I thought I would show you some petty cash and change fund exercises here. I'll make this brief. I believe it's exercise 6B5 out of the book or something similar to that. And it has to do with a cash register, which is similar to petty cash, as we discussed in class. However, this is a cash register actually where they found a cash shortage. You know how they count cash at the end of the day or at the end of a shift to determine whether or not the beginning balance of the change fund plus the additions of cash from sales can be accounted for, and in the process we can determine overages or shortages as the case may be. Now, the narrative here is that we keep a minimum of $19 to make change in the fund. So what happened here is that we started with that 19 as a fact and rang in $1,204 in sales. As you can see, the cash sales from the sales tapes were $1,204. So we should have $1,223 on hand. But when we went to count, or when we did count the cash, we only counted $1,149. So there's an obvious shortage here, a calculated shortage of $74. You can see the math. Okay, so that 74 bucks has to be accounted for as a loss, utilizing the cash short or over account and making a debit. When you debit that account, it becomes an expense. And if there was an overage, it would be a credit, and that would be like miscellaneous income from errors that obviously were made in making change, but hopefully from an internal control perspective, nobody stuck their hand in the register and pocketed the dough. You see, that's why we make these counts, and sometimes we make the management will make a surprise cash count on you to see. They'll just stop the music in the middle of the dance, and they'll check out the amount that you should have, like should have that on hand, and they count up, and bang, they found a loss, and then the next thing you know is you're as the cashier, you're on the red carpet at some point, if not the first time, I'm pretty sure the second and third time, and you could get yourself fired. Anyway, so yes, we will have to record the journal entry that will recognize the cash receipt for the particular day's sales, cash sales, along with the revenue associated with it, and of course we have to identify the loss, as we noted, the $74. Now, the amount of cash that we actually added is $1,130, so that's the amount that we have to debit to the cash account, because that's what in fact we took in. They have a little calculation down here to show that 1130. I prefer to take the difference between the 1149 that is actually in the cash register minus what they started with. Okay, so they started with $19, and if I subtracted what they started with, 19, from the 1149, you can see clearly here that the 1130 is the amount that is added to cash, and we can take that over to the journal entry. As you can see, the debit now is to cash for 1130, the debit to cash short or over is 74 bucks, and the credit to the daily sales account is 1,204, as we noted before. So that's it. I hope you understand it and learn something new. Okay, use it. Thank you. Bye-bye.